Chris, can you hear me?
I can hear you.
Perfect. Well, here we go. Welcome. It says we have 13 folks on here, so we will see. This is one of our more exciting, if you're a mortgage junkie, one of our more exciting webinar. Yeah, Chris, raise your hand. One of our more exciting webinars that we do for our real estate agents, because it's it can be one of the most challenging things that real estate agents go through, and that is trying to figure out how to get condo financing. So we'll give you a little background and a few things. There is a comment section, should be somewhere on the right there. So if you do want to drop any comments or have any questions, Chris and I will be kind of managing this over the next 30 to 45 minutes, somewhere in that time frame. We're going to try to roll through this in a half hour for you. We are happy to get you kind of a copy of the presentation after the fact. We would ask that you keep it private. Don't share that with friends and family. Not that anyone wants to read that stuff. But we do consider ourselves the condo experts. So we'll give you a little background. We know most of you on this webinar right now, but some of you we don't know. And we're happy to see you here. And we are live and we are recording this right now. So we're excited to bring you some continuing education on a monthly basis. My name is Rob Ross with the Ross Group. My partner, Chris Kearney's on here. Our other partner, Alec Gagne, is at a broker's open right now. So we're giving him a free pass on this one. And he's out supporting the local real estate community, which we love to do. Moving this along here, this is all things condos. We pretty much are going to cover everything from condos soup to nuts, and we'll go through the presentation here. There really are a ton of moving parts with condos. And when we tell you we are the condo kings, that's what we like to say. I've personally been doing this 24 years now. And I really cut my teeth in the Washington, D.C. market back in the year 99, 2000, 2001, somewhere in that 2-3 year time frame, and have now officially closed out over 80 condo projects. And what does that mean to you? It means you're dealing with a team that understands condos, and that is drastically important. So we're going to go through things today that explain why you need condo financing and how you get it. Basically, we're going to explain why a condo is either warrantable or non-warrantable. That's really what we're going to be talking about. And there's a lot of moving parts that can make a condo warrantable versus non-warrantable. And we're going to talk through those today. And we're going to give you a few tips as real estate agents on how to maybe separate yourself or differentiate yourself when you're competing for a listing. Okay. So I will kick this off here. First, here's the states we lend. I do apologize. We didn't get to update this. We are no longer doing California. We just weren't doing enough deals out there. And we don't want to go through all the red tape of licensing, but no longer in California, but we can help you in a ton of states here. We do have a new condo project right now in Gainesville, Florida as well. So we've been very excited to be on that 92 unit property. Why ICM and the Ross Group, we would be doing ourselves a disservice if we didn't give ourselves a quick plug here. We feel we're second to none. Like I said, we've got close to 40 years combined experience between Alec, Chris, and myself, and we really are 24/7. So if you need us 7 days a week, we're here to help. We specialize in all things mortgage. We don't do commercial financing, so we'll keep it at that. Everything's done in-house, which makes this condo process very smooth. We're one of the largest privately held mortgage companies in the DC metro area. There's the team. I apologize for a little formatting there. The word group is missing. But myself, Chris, Alec, and I'd be remiss to not mention Claire Fleming. She's our processor and transaction manager, and she is absolutely amazing. And she's been with us 13 years now. moving along, before we get into the thick of this, just a few things that we do. We do portfolio, non-QM stuff, construction and bridge loans, all your government stuff. We really do a ton of 2-1 buy downs. We can look at any down payment assistance programs, whether it's MMP, DC Open Doors, West Virginia Housing, VHDA, you name it, we can look at it. We do primary, second homes, and investment homes. We do have the 203K renovation loan back if it makes sense to do that. We can help with home equity lines. Heck, we can even help with 5 to 9 unit properties right now. I think people forget that, but 5 to 9 unit properties, non-warrantable condos, 8-9 day closings, all the fun stuff you know about the team. We will move past that. Now let's get into the thick of condo lending and condos in general and things you need to look for. There was a massive sweeping changes in the industry that happened through Fannie Mae and Freddie Mac in 23 and 2024. And we're going to talk about a few of those right now. Some of the things that there's major changes on or just have made it a little more challenging to obtain condo financing. Insurance, special assessments, reserve studies. That's an interesting one. Chris and I love, we stay up at night thinking about these reserve studies. Critical repair, deferred maintenance, transient housing, and we're going to talk about the documentation requirements. Okay. And yes, we are recording this for you guys as well. All right. I'm going to talk through the first portion of this. Chris will bring it home towards the end, and we'll take questions as you have it. Just to mention this, right? You basically have 2 types of condo projects out there. You have new and you have established. And I don't think I have to tell you what that means. I just said I'm on a new project in Gainesville, Florida. They haven't even broke ground yet. They're about to, but it's 92 units. It is being built from the ground up. That is new. And established are exactly what you think. They are typically your resales. Okay. Established, for established condos, you have to have all units and common elements that are complete. They can't be subject to any additional phasing or additions. At least 90% of the total units have to be conveyed to the purchasers other than the developer. And let me explain that a little bit. If a developer comes in and sells a 20-unit condo project and they are selling the project off, and the developer decides to retain 2 of those units, maybe 10% of that project, they can do that, and that's fine, but the developer has to own those 2, and the rest have to be conveyed. That would be an established condo project. For an established condo project, the developer also has to turn over control of the condo association over to the unit owners, which is usually going to be managed, depending on the size, it's usually going to be managed not privately, but by an outside condo management company, okay, or association that manages it. So that is who we deal with. For your new projects, condo units are built or being built, okay, and the project can be expanded by additional phases or units not yet built. You're usually not going to see that. You're not going to see a project starting to get built and then a developer decides midway, hey, I have a piece of land next door. I want to build another 20 unit next to it and add phase 2 or phase 3. You usually don't see that. A developer usually knows exactly what they're going to do going in and exactly how many phases there are. But for example, if you're building a massive project and you have 2 buildings, we would recommend to the developer that you have the first building is phase 1 and the second building is phase 2. And if you do it in phases, it makes it easier for your pre-sale requirements, which we'll talk about later, because you can literally have 2 condo questionnaires for phase 1 and phase 2. Makes it much easier to do. So my tip there is if you are on this call and you're a real estate agent or a developer, or you're working with a developer and you're in the front end kind of planning on how to build this new project, consult with us. We have a ton of developers, and I won't mention names, but a ton of developers I've worked with through the years that before they ever break ground or even start thinking about a condo project, they consult with me to say, hey, what do we need to do to make sure that we can sell these units once they're done? So if you are in that scenario, please call me and let's do a free consultation. So there you go. That's established versus new. I am going to read this. I usually hate kind of reading through some of this stuff, but I feel it's really important for this webinar. So insurance on a condo project. Let's make sure we understand this stuff. So of course, sufficient insurance are still required, even if a condo is exempt from review. Let me explain real quick what exempt from review is. Your condo, when you send us a buyer and we're working with an individual unit or a new condo project, certain projects might be exempt through Fannie Mae or Freddie Mac, or we might be able to do what's called a streamline review as a lender, which is the first thing we always look to do. And if you're exempt means we don't have to send you this 27 question condo questionnaire and have it completed by the association and sent back for us to evaluate. Okay. So if you are streamlined or you are exempt, we still need proof of insurance. That seems like common sense. Insurance deductibles cannot exceed 5% for required coverages. This is an important one. An HO6 policy is required for the borrower unless the condo's master insurance policy includes betterments and improvements, which it usually doesn't. What is an HO6 policy? That is just a technical term for when your buyer buys a condo, they need, think of it as homeowners insurance. Same thing. For a condo, it's just called an HO6 policy. It's substantially cheaper or less expensive than like a homeowner's policy for like a single family or a townhome, because you do have this master condo insurance policy. So think of an HO6 policy as walls in. Everything from the drywall in on the house, that's what that covers. Everything from the drywall out is kind of the master policy. A minimum of 100% replacement cost is required. This is new, right? Chris and I were talking about this earlier. Inflation guard coverage is required unless it's not available for purchase by the HOA in a certain market, which that could mean there's a big issue with that, right? So inflation guard basically means that the master policy for a condo project must now have inflation guard to go Fannie and Freddie. And inflation guard means that once the client or your buyer, I call it the client, once the buyer moves into that property, okay, we want to know that that insurance policy covers them 7 years from now when the price of lumber or concrete or replacement value is now higher. The inflation guard covers that, right? We want to make sure that these buildings can be replaced. If you just go Google condo buildings collapsing in Florida, you'll have a great Saturday night of reading, because there's a ton of stuff that happened in Florida that is now really a lot of the reason that we're responsible for having things such as inflation guard on insurance now.
Real quick before you move on, Rob, because that one is super important.
Yep.
Everyone that's listening, take a second just to digest that one, because inflation guard is we're seeing it a ton. A lot of homeowners associations are being proactive, getting that done in the building ahead of time, but we're also seeing a lot of cases where they have no idea. And so, it takes a buyer, buying a home in a condo building for them to realize, oh, we don't have inflation guard in place. Well, in a lot of cases, you can't close a loan right now without having that inflation guard. So, these are not things that, that come up in a first interview, or that, that you'll see in a resale package on the very first page. This is part of the process. And this is why who you work with, especially when it comes with condos, really matters, because we're looking out for all this stuff for you. And we actually had an example where a master's policy did not have inflation guard, and we had to get a different insurance company involved, rewrite the entire policy for the whole building, the whole new master's policy, and still close on time. Normally that can take months, but instead we were able to get it done in a week and a half. So just a quick note that you will see inflation guard, if you haven't yet, if you're dealing with condos. That is a buzzword that'll come up.
Absolutely. Thanks for that color, Chris, and couldn't agree more. We'll keep moving forward here. Waiver of rights of recovery is now required and cannot be excluded. Equipment breakdown endorsement is required. That is new. So let's say you have an HVAC system that covers the hallways, right? So let's say there's hallways in this condo project and there's AC in the hallways and so forth. You have to make sure that some of these condo projects become a little tight on budget, and we'll talk about that later. we need to make sure that this insurance covers this stuff. Because if things break down or if there's, tragedy, we need to make sure that it's rebuilt the right way, up to code, basically. A master COI policy may not exclude coverage of any required perils. Think of it this way. A master insurance policy on a project cannot say we're going to protect this project against hail and wind, but not fire, or fire, but not tornadoes, right? It has to cover all major perils, right? So you can't pick and choose. And trust me, some of these insurance companies are going to, I've witnessed it. They're going to say, hey, we're not covering versus wind damage anymore for the roof. Well, that could be an issue, right? So that's one thing. And last bullet point on here, our processors will obtain the certificate of insurance master policy as soon as possible if a condo pack is not ordered. Let me explain what condo pack is. Condo pack is a third-party company that we work with at Intercoastal, that when we receive a buyer buying a condo, we order through condo pack the condo questionnaire. Condo pack's job is to get with the property management company and to get that questionnaire completed and get that back to us. It's an independent third party, which shows that we're not influencing anything, because nor could we, nor would we. And we can't. We don't fill it out. But it's that buffer in between that makes sure everything is on the up and up. There are a lot of companies that do some potential things that would be frowned upon. We are not one of those. So we make sure we do that so there's no delays. So even if condo pack has not been ordered for a few days, Claire, our processor, she's all over it. You might even find Alec, Chris, or myself asking you, hey, can you get us a copy of the master insurance policy as fast as possible? So we'll move on from insurance. This slide will be a little faster. Special assessments, and I won't read every word of this, but a special assessment can come on just like it can in a country club, right? If you've ever been part of a club or a country club or some sort of local community, you might get a special assessment because they're updating the greens or buying new golf carts, or they have some things that they know they're going to need in the future. So therefore you have a fee or your dues are higher. Same thing can happen in a condo project. They can say, hey, we know the roof's going to need replaced soon, and the railing in the photo here is iron, and it's going to need sanded and repainted soon. So the whole project still looks nice. So we have a special assessment we're going to collect. The condo fees are going to go up by $100 more a month for the next 24 months or whatever that might be, right? So special assessments can always be there. Where you might run into issues would be if there's past due assessments. So we have to confirm as a lender that there's no more than 15% of the total number of units in a project or 60 days or more past due for each special assessment. So those questions are answered on the condo questionnaire. And again, if you let us know afterwards, I'll make it actually easier. If you're part of this webinar, we will send you an example condo questionnaire. So you will be able to see what is on there. It's about 25 to 30 questions now, right? Somewhere in that range. Might be 27 on the nose, but somewhere in that range. And these are all the things that we need to review, right? A reserve study, this one's kind of interesting and this one's new. Most condo associations, if there is a special assessment, there is a reserve study that typically needs to be on hand and no older than 3 years. That's kind of the rule for a reserve study, right? And we want to make sure that reserve study shows that there's enough in reserves to cover these special assessments, to make sure they're coming in. It's an independent third party that's going to go meet with the president of your HOA and the vice president and the condo management company, and they're going to give you an official study to say, here's how you need to increase your condo fees. I own a few condos, and I've owned many throughout my life, and my least favorite thing are, man, these condo or HOA fees keep going up. Well, why do they keep going up? Well, reserve studies, right? It's when a condo project is properly managing the budget and reserves. I can tell you from experience, and a few agents might be on here who have experienced this with us, we have witnessed projects that do not manage it. They're normally self-managed, and someone's just not on the ball, and they really are kind of close to upside down. If there's one tragedy that goes wrong on this 8-unit or 15-unit building in wherever, these homeowners are going to have a rude awakening. They're going to have thousands and thousands and thousands of dollars, right, that they're going to now have to fix to repair. And what happens if the owner in unit 101, well, what about unit 102? They just lost their job. They can barely make their mortgage payment. They can't spend $5,000 for a special assessment right now. That's why managing these projects has become more important than ever. And that's why condo financing has become a little harder. And when I'm saying that, we really have, I would tell you as a team, we really don't find a condo that we typically can't finance. I mean, I'm going to tell you, Chris, 1 out of 20. I mean, we can, right?
Maybe less than that. Yeah.
Yeah, maybe less than that. I mean, it's very few we can't figure out an answer for because we have so many options. Okay. So let's keep moving forward here. Critical repairs. And again, I'll give you a copy of this, but mold is big. Especially if you have like a building and in the basement of the building, there's some sort of storage unit for the whole building and there's mold or water that can cause issues, right? That can cause a loan to not go to closing. Of course, common sense would say if you have failed any state or county mandatory inspections, if there's any unfunded repairs costing more than $10,000 per unit, that should be undertaken in the next 12 months. This does not include repairs made by the unit owner or repairs funded through special assessments. This is something totally different. Examples to consider: on the beach, seawalls, elevators, waterproofing, stairwells, balconies, foundations, roofs, electrical systems, parking structures is actually a big one right now. You'll see the buildings look good, and a lot of these parking garages, if there's a structure next door, a lot of them are starting to look neglected. I don't know that I would want to park in some of those. Load-bearing structures, right? So all of these things, and Chris was explaining this to me earlier, that's on the condo questionnaire right now. It's part of what they're going to be filling out. It's part of the question on there to say, do they have any of these repairs, critical repairs coming up? And if they check yes, and they say what they are, we have to do our due diligence and make sure the money is there to repair the stuff. Deferred maintenance, let's just say could have a major impact on safety. Again, a lot of these condo buildings that just sinking into the ocean and falling over in Florida were because of deferred maintenance, and it's bad, right? Transient housing, red flags. Basically, if 75% of a project or more is owned by an investor or second home, it could make financing a little more challenging. Now, as long as you are buying, let me say this, as long as you're buying as a primary residence, how do you ever shift from a high investor or second home ratio? How does that shift back to a primary or a primary owner? Well, it's Fannie and Freddie allowing the primary owner to buy in the property as long as they're buying as a primary. So you can do that. I'll say that again. As long as your client is buying as a primary, financing is much easier. Okay. It's when someone's buying as an investor or buying as a second home that we really start needing a lot of these non-QM products. If your building is a condo-tel, I'll just say it, we can't help you. It's very rare that I'm going to say that, but we can't help you if it's a condo-tel. There's special financing for that. We could refer you to someone. A lot of the folks that do condo-tels really just do those or specialize in those. But it's more of a hotel, right? Where you literally might just have a hotel unit that's sold as a condo and it's got like a little kitchenette or whatever. Or usually less than 400 square feet, right? So resort type areas, condo-tels, that stuff. Those are really non-warrantable condos. In my last slide here, just kind of talking through this, here's the documentation required. When you have a buyer come to us, they're probably doing one of 4 types of loans. Either on the right here, a conventional Fannie Freddie loan. On the left here, a government loan, a VA or an FHA. And then the 4th type of loan would be a non-QM loan, which non-QM just means non-qualified mortgage, and it's non-warrantables. It's self-employed borrowers that don't show income on taxes. It's a lot of stuff outside the box. So those are really kind of what you need. But what we need for non-QM or for Fannie and Freddie, we need condo questionnaire completed. We need a copy of the HOA budget, full condo, right? for a full condo review only. We might tell you it's streamlined and we won't need it. We need the borrower specific master insurance policy. We need flood policies if in a flood zone. Of course, we need the appraisal. And then depending on what the condo questionnaire says, we might need the litigation documents, the reserve studies, the engineering reports. We don't ask for litigation docs, reserve studies, or engineering reports up front. We get the condo questionnaire first. It goes to our condo review desk, which is Brittany. Brittany's amazing. She's been with us about 10 years, and she does all things condo for our company. So yes, at Intercoastal, we literally have a condo review desk, and they will come right to us. And that's that. And then let's move forward here. So for FHA or VA, it's a little bit easier. FHA or VA condos, we only need a printout from the website. And Chris will talk to you about this later. There's actually a website that will show you whether a condo is FHA or VA approved. And we literally just need a printout from that showing that it's FHA or VA approved. We do need a copy of the insurance because although it's FHA and VA approved, which is fantastic, we do need to make sure it's still insured. We do need to make sure if it's in a flood zone that they have flood insurance, and we do need an appraisal. But FHA and VA can be a little easier if the projects are FHA and VA approved. Let me recommend this too. Here's a little tip, pro tip for real estate agents. If we have pre-approved your client and they are doing an FHA or VA loan, and you know you're showing them mostly condos or townhomes and condos, and they haven't ruled condos out. I have witnessed this in the past, and I still don't know why I've witnessed this, but I'll have agents take clients out on a weekend and show them 4 condos and then come back and say they want to make an offer on it. And we're going to find out that the project's not VA approved or not FHA approved or can't be VA or FHA approved. And I'm like, wait, you just wasted your time as an agent. You showed them 3 places that they can't even get financing on and they need FHA or VA. And now the client's disappointed. They really wanted this property and they can't qualify for it, right? And you don't want to waste your time and you don't want to waste the client's time. So the reason I'm giving you this pro tip, and Chris knows where I'm headed with this, is if you have like a zip code or two, an area where you're looking for a client and you know they need FHA financing and they're looking at condos, we can actually send you every condo in a zip code that is FHA approved. So now you're only looking at listings in the condos that your client can actually purchase in. So again, ask us for that list. Let us get you. We'll send it to you in an Excel chart, and it'll show you the exact condos that are FHA or VA approved in a certain zip code, and we can help you out with that. Chris, I'm going to pass the torch over to you. Do we have any? I know I went through a lot of stuff there, and it's a lot of legal jargon that we have to handle as lenders. But what we're trying to have you understand is, as our real estate agent and partners, is that there's a lot of moving parts in the background with condos, but we do our due diligence up front on this. We get that condo questionnaire ordered immediately, day one, as soon as it's ratified, right? Even before the appraisal. We check day one. Brittany, our in-house department, checks to see if the project qualifies for a streamlined review, right? Or has waivers. So there's a lot of different things we do up front that really helps. And I'm going to say this, and I can't see the real estate agents on here right now, but when I say this out loud, I'm assuming you're going to shake your head yes. How many times have you gotten to a day or 2 days before closing on one of your listings or representing the buyer, and you find out there's a big issue with the condo, and now you're hitting the red bat phone and you're calling the Ross Group to bail you out on a condo? That happens. We get those calls all the time. Work with a lender that understands condos to where we can tell. I can't say there's not an issue on a project. And if you're representing the buyer and there's big issues, you don't want your buyer buying in that project if they're going to get stuck with massive special assessments and thousands of dollars 2 years in or 10 days in. Or better yet, as a listing agent, this might be a little sore spot, so don't take offense to this. If you're taking on the listing, and Chris is going to talk to you about this in a little bit, get the condo questionnaire done up front. And I'm going to pass the torch because Chris has some great advice on that. Chris, I'll let you take over and just let me know when to go to the next slide.
An excellent segue here to our agent challenge, what Rob was literally just describing. So what Rob just went through, all the highlights, all the high level details about what has changed in the condo world, really within the past year and a half. So if you haven't seen some of these, don't think that it is not possibly coming down the road. This is a really good thing that you're here, a really good thing that you're learning about some of these things and how to avoid some of these pitfalls. Now, to the challenge. So what we're going to do now is we have a couple of agent challenges, talking about some of the highlights that Rob mentioned already, but in an actual setting where we've been able to help, or ways for that you may have seen with your buyers or sellers here recently. So agent challenge number one, your buyer is under contract. They're buying a condo in Arlington. And then, oh no, you get that unfortunate call. 2 weeks from closing, the lender that they're working with says they can't do the deal because the condo is non-warrantable. Well, in that case, what can your buyer do? They're having a lender tell them that they can't do it. Well, first of all, what is a non-warrantable condo? Well, there's a lot of different things that can cause a condo to be non-warrantable. Some of the most common ones are here on the screen, which, a lot of times it can be like an individual or a company that owns more than 20% of the units. Any DC agents know McLean Gardens. That's a really popular one where there's one, management company that owns more than 20% of the units. If there's commercial space that exceeds 35% of the total square footage, we see that every now and then with some of these new builds. Another common one is over 50% of the units are investors, which we'll talk about. 15% delinquency rate on condo fees. So there's a bunch of different things. All of these bullet points that you see here, all of these questions are answered in the condo questionnaire. That's why that's such an important piece of the puzzle. That's why we order that day one. If not, try to get it a little bit before you go under contract so that we can have all those answers. Next slide, Rob. So here's an example, right? So there can be buildings out there where, we order the questionnaire, we get the questionnaire back and it says, okay, out of all of the units, only 40% of the people in this building own a unit as a primary residence. 60% are investor, right? So we have actually gotten referrals from other loan officers before that say, hey, got another one for you guys. Sorry, we just found out that there's more, that the investor ratio is over 50%, so we can't do the deal. Well, it's not as black and white as that. It depends on the situation. Rob hinted at this earlier by saying, if your buyer, so if you're a realtor and you're representing the buyer in this case, if they are buying as a primary residence, then we're good to go, assuming that, the only issue or red flag was a high investor ratio. So as long as a buyer is buying as a primary residence, it gives you some flexibilities around that rule, which is huge. So that's something good to know there that other lenders don't even know. Don't tell them. Remember who taught you. Next, so another common one, a really common one that we see a lot of, delinquency rates on condo fees. So this one is kind of interesting because there's really nothing that you can do to control it, right? Like there's no way of knowing, what current owners in a condo building are going to do if they're going to pay their bills on time or not, right? So the rule is with Fannie Mae and Freddie Mac is if 15% or more of the unit owners are delinquent or late on their condo fees, that's an issue. And that can cause an entire building to be non-warrantable, right? So we had an example here. So this example was a 21-unit building. We got the condo questionnaire back, and 5 units were delinquent. That doesn't seem like a lot, right? But in a 21-unit building, it's over that 15% limit, right? 23%. So again, it doesn't seem like we're that far off, but based on the what the condo fees were, and there may have been an assessment involved here too, the total amount to get that one person, current on their fees was $1,300. So again, what you'll find a lot of with other lenders is they'll see, oh, shoot, you're over the 15%, done, move on, or get out of the contract, or, that's it, right? End of the line. Well, with us, it's okay. There's a roadblock. How do we get around it? How do we get over it? What do we need to do? Well, in this case, the answer was $1,300. So a $1,300 payment, towards one of the unit owner's condo fees got us below that threshold. So the buyer's agent in this case was able to negotiate that $1,300 into the contract so that we could get financing and close on time. Everybody wins. So that was a really good one.
Yeah, that just to add to that's an old trick I probably used 20 years ago, Chris, and it's been amazing. Again, loan officers and other mortgage companies just saying deals don't work. Everyone hits the panic button. Now if this was $27,000 instead of $1,300, then maybe there was a bigger issue, and that seller's not willing to pay $27,000 to make the project current, right? So it does depend, but it's having a lending team and company that understands how to navigate when there is a challenge with a condo, or there is a red flag on a condo questionnaire. So it's not always, life or death. It doesn't, we can sometimes get out the shock paddles and figure out how to bring these deals back to life. So.
Exactly. All right. Next challenge. So let's say your buyer has been pre-approved and they need an FHA loan. We've been doing a lot more FHA loans lately, just based on how great those interest rates are right now compared to conventional. So this is a very common one. Now, you being a great realtor that you are, you get them under contract on the perfect condo, but oh no, the building is not FHA approved. So if it's not FHA approved, you can't get FHA financing. Do you have to cancel the contract? Do you just back out? What do we do? Well, first of all, there is a place where you can go, or you can just, ask your favorite Ross Group team member to look it up for you to see if a condo building is FHA approved. Rob mentioned this earlier too, where we can look up an entire zip code for you, send you the list of every condo building that is FHA approved. This is just a screenshot of what that website looks like. If you want access to this website, let us know. Message us after this. We'll send you this link and you can look things up whenever you want. If you don't want to add more to your plate, again, just ask one of us, Rob, Alec, or myself. Now, what the website will not tell you is that we can get individual units FHA approved. So as one of your preferred lender partners here, we can get an entire building FHA approved, or depending on the scenario, we could also get one individual unit FHA approved, even if the rest of the building is not. And we've been, there really isn't, one that's necessarily more right or wrong than the other. It's completely situational and depends on if there has been an FHA approval in the past, if it's expired. There's a bunch of different factors at play. But either way, we can get units or entire buildings FHA approved if it helps your buyer. Now, what does that timeline look like? So whether it's an entire building or a single unit, that can affect the timeline. That can cause some differences between those two options. But either way, you still have to submit a bunch of documentation to FHA for them to approve. So this can be on existing projects, and that's most of the time what it is. Or if you have a new project, a new construction project, if you're the listing agent and you're selling, a new 10-unit building in DC, or a new conversion in DC or Virginia, whatever it looks like, FHA financing might be helpful there, and we can get that approved. It can be a 2-unit conversion. It can be over 100-unit building. So either, anything in between. And that timeline, we know how to do this. So not that I would advertise this to the world, but we have gotten an FHA approval for a single unit in less than a week. I think it took 4 business days. Again, I'm not going to advertise that, but that is something good to know that is possible. I would set the expectation, though, that it's probably closer to 2 to 4 weeks, in going through the entire process, start to finish, of getting that FHA approval done. Once the approval is in, then we can order the appraisal. So in this example, the challenge that I read, on the last slide, what if you write a contract, you're under contract on a building that's not FHA approved, oh no, what do we do? Well, we can go through all these steps and you can still get to closing. We could still maybe do it in 30 days, but since we're at the mercy of FHA in that scenario, we may need an extra 10 days or so, just depending on the situation. So you're looking around a 35, 45 day window. All right, next challenge. So let's say you have a potential seller client that is interviewing you and a few other realtors to sell their condo in Reston. By a quick show of hands, and I can't see you, but quick show of hands, have you ever been interviewed by a client to sell a listing? I mean, I'm sure most of you probably have, right? People shop mortgages all the time, but clients are starting to now shop their realtors a little bit more upfront. They're doing their due diligence. They're, asking what makes you better than someone else. Well, here's a great differentiator right here. This is a great example of how you can stand out if someone has a condo that they would like for you to sell. Next slide. You get a condo questionnaire done up front. Take any snippets from what we just talked about today, and you can use that in a presentation for a potential client or a potential listing that you take on for a condo. A lot of realtors are not experts in condo financing. So there are a lot of things that you could bring up front to show your expertise. Well, one way to do that is this, getting a condo questionnaire done up front. The cost is pretty minimal. I've seen associations charge like $100, $200 to get it done up front. Some really good realtors are able to just get it done for free because they're such good negotiators. But somewhere in that range. This will help you immensely if you get a condo questionnaire back and you see issues. First of all, send it to us so we can read it and we'll tell you what the issues are, because the questionnaire can be long. There can be a lot of info on it, so we don't expect you to be able to, to go through everything line by line. That's what we're here for. So send it to us. We'll come back to you quickly and say, okay, here's XYZ reasons why there could be issues here. If you go to that potential client and say, hey, I'd love to help sell your home. I know I can do a great job. Here are 3 issues that I can already see, and I haven't even, signed the agreement with you yet. People are going to have their ears open when you tell them there could be a potential issue, or maybe we should try to get the building FHA approved to open up the buyer pool to get more offers, get to a higher price, right? Like there's tons of different scenarios where getting this information up front, which doesn't take very long, it doesn't cost very much. That can be the difference between you getting a listing and getting a sale, or losing to somebody else. So contact us. Well, and Rob said too, anyone that's on here, anyone that's signed up for this, we'll send you a copy of a blank copy of a condo questionnaire, just so that you can, save that, for your records, and you can use that on any condo listing or project that you have coming up. And you can use that to try to help, make your life that much easier.
Yeah, absolutely. So we know we're just about 45 minutes here. That was kind of the goal to keep it under the hour. We know we went through a lot of stuff here. I'm going to tell you there's still probably 10, 15 more minutes worth of information we probably could have thrown in here, but we didn't want to overwhelm because there's already enough here. But I think the biggest takeaway for you as a real estate agent should be having something in your listing presentation, that explains to the person you're trying to hire that you want to hire you, I should say, the client that you want to list their home, and explain to them that you are an expert in condos as a listing agent and you have an expert lending team behind you. So whether it's the buyer coming there or us, I'm just going to say this. We have a lot of our agents that'll have a listing and they will put us in the remarks as the preferred lender. So they'll say, and just so you know, we'll give like a 0.5% credit towards closing or something. So the Ross Group will give a credit towards closing. They are the preferred lender on my listing. Here's the condo. And, we don't have FHA financing now, but we can do an FHA spot approval. We already know that the property is Fannie and Freddie approved. We've already done our due diligence on the front end. We already have a condo questionnaire. We can do so many things to get ahead of the competition, and really help you make sure that you don't have that 11th hour challenge on a condo. So we feel it's important for you to have this knowledge. We feel it's important for you to be proactive as the buyer's agent or listing agent on these condos. And just know that our phones are open 7 days a week. We're like I said, we're happy to help. And we don't think there's anyone better at condos than Intercoastal and the Ross Group. So before we sign off here, give me about 24 hours to send an email to everybody that joined today. And in the email, I'll send you a YouTube link to this recording. We'll send you that condo questionnaire that you can kind of read through. And if you have questions on us, let us know. And we have another PDF that kind of explains some special things we do for condo financing. Any questions before we sign off here? There is a question on here from Brenda. No, there's not really a Fannie Freddie approved condo. There's something on the back end. So there's really, from my knowledge, there's nothing that's forward facing to the public that you can go find for free to look up if a Fannie, if a condo project is Fannie or Freddie approved. Brittany and the Ross Group, we have access to something, so we can go look. But even if it shows up as Fannie or Freddie approved, depending on the investor, and if it's a jumbo loan or a conforming loan, you still might need some updated condo questionnaires, even if it's showing as approved. So it doesn't mean it supersedes everything else. But it is a good sign that if it is on that list, you know, that's the first thing Brittany and our team looks at, is we go to all of our sites to see what's approved, what qualifies for a streamline, what doesn't. It's the very first thing we do day one when we get a contract. So in fact, we actually will do it ahead of time. So when you're writing the contract, we are already doing our due diligence to get ahead of the game on this. And we will send the government link as well, Natalie, so you can look that up and make sure you can always look that up. Sometimes it's kind of I always recommend searching by zip code. So that's the pro tip. Search by zip code. Because sometimes if you put in the city wrong or misspell something, and it's a super sensitive website, and you might miss something. So zip code search is the best.
Mm-hmm.
Any other questions before we sign off here? Well, you know where to find us if you think of something as soon as we hang up. We appreciate you. And on behalf of myself, Chris, and Alec, we are the Ross Group, and we are always working together to serve you better. And we'll see you soon. Take care.
Thanks for joining.